We all know running your business is no easy feat. So between getting products to market, investors to please, and employees to pay, getting cyber insurance is probably the last thing on your list, especially nowadays if you're trying to stretch your money. However, if you are not adequately protected, you could lose everything you've worked so hard to build before you even have a chance to make your mark. Today, we're fortunate to have Peter McCabe, the Assistant Vice President in the technology practice at PROLINK, Kevin Dawson, the CEO, and Aiva Sharakovsky, a partner and sales executive at ISA Cybersecurity, to share cyber insurance qualification requirements, key organizational risks, building a cybersecurity strategy, and much more. And what we would like to do today is open things up. Questions, if you have any questions, please feel free to throw them in the chat. And what we're going to try to do is address them at the very end of the session. Some stuff we may be able to get to as we go along. If we do not cover everything, we're going to capture the list of questions. I'm going to throw it over to Peter, Kevin, and Aiva, and they'll try to address them, and then we will send them out. With that, I am going to turn it over to the team.
Thanks, Kelly. We really appreciate the opportunity here to present and the commitment that Tech Connects has made to education and to helping members navigate certainly uncertain times here, especially when it comes to the cyber landscape. So thank you so much for the opportunity. As you mentioned, my name is Peter McCabe, and I lead the technology practice at PROLINK, which is an independent Canadian insurance brokerage focused on serving firms in knowledge-based industries. The goal for us is really to create resilient organizations and to help our clients retake control of the insurance buying process. But the big question is, how do you do that? And with so much change in the landscape, we know that we need good partners and that there's lots that can be done to help businesses get an advantage when it comes to managing things like their cyber risk overall. Are we able to go to the next slide? Awesome. So here's an overview basically of what we're going to cover today. I'm going to talk a little bit about the current cyber insurance landscape and the qualification requirements. So if you've done a renewal recently for your cyber liability program, you understand that it's getting more difficult out there, that insurance companies are asking ever more questions and are being more particular when it comes to their requirements for underwriting cyber. We're going to get into a little bit of the what a claims scenario looks like as well. I know people don't want to use their insurance policies when they buy them, but in cyber, we are seeing a high volume of breaches. So these policies do get put to the test. And we think it's important for businesses to know when to report a cyber incident based on what's happened. There's a real gray area there. It's not quite as clear as getting a statement of claim from a lawyer that says, you know, you're due in court or you need to respond here because there's been a lawsuit. It's a little bit more gray. Then Kevin and the team are going to look at key organizational risks, the build out of a great cybersecurity strategy, and then ISA's cyber insurability reporting tool. And then we'll get to questions at the end. So away we go. Next slide. So again, the goal for us at PROLINK is helping clients understand the risks they face, assert control over the insurance buying process. So the feedback we get from a lot of clients and from prospective new clients is that they feel like it's a very one-sided transaction, right? The insurance company chooses a bunch of random metrics, judges the business on that basis, and then determines the pricing that a company is going to pay based on a bunch of factors that feel like they're beyond the control of our clients. And so the goal for us is to help our businesses understand their risk, retake control or assert control over the insurance buying process, and then additionally, in the high growth tech space, manage their upside. So figure out how they can use insurance and risk management and some of the tools and strategies that are available in order to optimize their business and see around corners a little bit so that they can take advantage of the opportunities that lie ahead for them. Next slide. So what I'm going to get into a little bit here is just what the current landscape looks like for technology businesses that are looking to purchase cyber liability coverage or renew their current coverage. And the important place to start when we're talking about this story is the loss ratio from 2020. I'll zoom out even further. The loss ratio is the amount of money for every dollar collected that the insurance companies pay in terms of claims. For the edification of everyone in the group, a good loss ratio or the insurance companies are happy in this sort of 80 to 90 cent range. So for every dollar in premium that they collect, they would like to make sure that they're not paying more than 80 cents or 90 cents in claims, right? Which leaves the 10% for expenses, profit, and everything else. In 2020, as everyone moved, the pandemic took hold, everyone moved to working from home, often on very shaky or sketchy home networks. Due diligence was lost in terms of things like password management, and human factors were poorly controlled. The cyber insurance industry saw loss ratios in excess of 400% in Canada, which means for every dollar collected in premium, about $4 or more than $4 was paid out in claims. And you don't have to be Warren Buffett to know that that's obviously not sustainable, right? And it's going to lead to change in terms of the way the market looks. And so for business owners on the call, I'm guessing you likely saw increases in terms of the premium that was collected, as well as increased scrutiny on your business in terms of the questions that were asked around the controls that your business has in place from a cyber perspective. These are things like things that have become common, like multi-factor authentication, for example. You can't get away now without having MFA in place, and most businesses have been asked to sign an attestation form that says that where applicable, they've got MFA in place. This is one of the key things that insurance companies chose to pick on. There also were declarations that they're asking for around employee training, around awareness when it comes to potential cyber incidents or clicking on malicious links and emails, things of that nature. So that process started early in 2021. The loss ratios then for 2021 improved dramatically, but we're still over 200%. So for every dollar in claims collected, or every dollar in premium collected in 2021, just over $2 was paid in claims, which means that which is a negative in terms of profitability for the insurance companies, which they don't like, but obviously a positive trend in terms of reinforcing that the steps that they're taking around tighter controls on businesses and increased pricing is starting to work. The results for 2022 have not yet been published, but we expect them shortly. And the anticipation is that the insurance companies have managed to get back to close to 100%, as in a dollar paid for every dollar in claims collected, which means that the strategy seems to be working. So the anticipation from us is that they're going to double down on that. The benefit for Canadians is that the market seems to be opening up as well. There seem to be more insurance companies that are offering capacity in the Canadian marketplace over the last 6 months, which is good, which means that the pricing increases should continue to soften. But we don't think that there will be any change in terms of the underwriting requirements. And what that means is that, and whether businesses know it or not, in the background, before your renewal, if you're a current policyholder for cyber, usually at about the 60-day mark before your key renewal date, the insurance companies are using third-party tools to scan generally the domains and other publicly available information about your business through a variety of different filters that they've developed with companies in the US, like Cybersecurity Scorecard. There's a company called Kind, which does a scanning tool as well, and a variety of others. And they've basically, through that process, developed a scoring matrix that allows them to determine what they believe is your risk score overall. Any cyber insurance expert will tell you, and Kevin will get into this in detail along with Aiva later on in the proposal, this information is incomplete at best. It's very helpful to know. It's incomplete at best and does not necessarily, in our opinion, always predict claims. However, it is sort of the low-hanging fruit information that's available. It's the kind of detail that is accessible to insurance companies, and it's an extra data point that they're able to use in order to do their underwriting. Now, here's the problem. Businesses don't get that information until the insurance historically have not gotten that information until insurance companies already have it, right? At which point, if there's an issue, we're playing defense. We're in a position where we need to go retroactively fix a problem that the insurance company already knows about, which in many cases is triggering them to apply higher rates and higher pricing when it comes to the renewal. The way that we've chosen to navigate this, and the reason we've partnered with ISA, which we'll go into in greater detail, is that we've developed a tool that allows our clients, PROLINK clients, to get access to a monthly report which gives them a line of sight into that level of detail that the insurance company is collecting so that we can get it before that 60-day mark, right? And that allows us to navigate these more stringent underwriting requirements and stay ahead of the game when it comes to managing our own risk and therefore managing the price overall. So the state of cyber requirements, underwriting requirements is changing. The landscape is still very difficult, and there's a lot of due diligence that's required by businesses in terms of managing all these various factors in order to take control of the insurance buying process, right? If you're a first-time buyer of cyber, for example, we would suggest that getting the scan done in advance through ISA is going to be very beneficial in terms of what your initial pricing looks like. And this is where we talk about in my slide here, know before you apply. It's really important for your broker and for your strategic partners to know all the risks that are applicable to the business beforehand, so that we're not being informed of those by the insurance company, right? Because at that point, it's already too late and the pricing will sort of become more difficult. The other thing that we're seeing is very common in the technology space is that there's sort of a hair on fire approach to obtaining the appropriate insurance coverage. Businesses, especially in the startup phase, don't usually apply for the coverage until they're seeing a contractual requirement to do that. And we would say that that's a little bit similar to painting yourself into a corner, right? The problem is that for our businesses, then they lose their leverage with the insurance company or lose the opportunity or the benefit of time to put themselves in the best possible position as far as their overall threat level or risk profile when it comes to applying for coverage. Next slide, please. So I'm going to talk very quickly. I know we're going to pass it over to Kevin and Aiva here shortly, but I want to talk quickly about some of the scenarios around a cyber incident. So this would be, again, we're seeing, so 2020, again, as I mentioned, 400% loss ratios, mostly low dollar in value. The average size of a claim in Canada, based on the information I saw, was about $135,000 per claim. And that's mostly expense driven, right? It's the cost to get the forensics done, to analyze your network, and to restore things to the way they were. We're not seeing huge liability lawsuits as of yet, where class actions are formed against businesses for mishandling of data. We're seeing a lot of expense driven claims based on the fact that there's a cost to rebuilding your network after it's been compromised, right? So here's some scenarios that we want to just run through quickly. This is actually a derivative of a white paper that I wrote that I can share around that goes into more detail about these incidents. But businesses also struggle with, again, because it's very unclear, right? Businesses who are current cyber policy owners struggle with when to report a claim to their insurance company, right? There's a sort of a fender bender mentality where people want to sort of handle things out of pocket, or decide that maybe we could sort this out on our own, or we can sweep up the mess and brush this under the rug, and we don't have to notify the insurance company. And certainly that's going to make our lives easier because it leads to lower rates overall. But the problem is that creates further problems down the line, right? So, network security issues overall are tricky to gauge. And even if your IT team can patch things up in-house, there's always a possibility that a threat actor could become aware of a vulnerability and exploit it later on. In many cases, companies are looking to get up and running again as quickly as possible, and then expecting an insurance company to foot the bill later on. But there are actually clauses and conditions in the policies which potentially limit the amount that you could be paid in the event that the issue itself is misreported. So the goal for us is to make sure that clients are aware of when to engage their broker to talk about when a cyber breach has taken place, to not necessarily take a fender bender mentality if there's been a scare even, and to engage your broker and a cybersecurity expert in order to move forward. The second situation is when there is a true ransomware attack and there's no cover up or sweeping up of a potential incident. They just want, there's a delay, right? Cyber incidents can be embarrassing at times, right? Businesses don't want to admit necessarily that there's an issue, and IT departments can sometimes be strong-headed in terms of the way that they want to manage potential issues themselves. The goal for us here today is to let you know that if you're a current policyholder, you should be really transparent when it comes to notifying your broker of any potential incident that's taken place, as well as making sure you're not trying to handle things on your own. So, here's, for example, following a security lapse, your data forensic team takes, your personal team or your IT department takes 3 months to assess the situation. And then you notify your insurance company, who appoints somebody else who takes 3 more months to review the situation. It means now you're waiting on a claims payout for 6 months because we've sort of gone through this process of long-term investigations. You know, that's a long time for businesses to be waiting for a payout, and potentially, you know, problematic when it comes to insurer approvals of payouts and that kind of thing. The goal for us here, again, is to make sure that you feel comfortable working with a broker partner so that you can push through the claims and get things sorted out as easily as possible. I know Kevin's going to get into this a little bit later, but the analogy that he used, which I'll steal, and I know he'll go into deeper, is sort of thinking of your network as a crime scene, right? Do you want to clean up the crime scene yourself and hope that nothing happens, that there's no further investigation, or do you want to press pause, bring in the experts right away, go deep, turn on the black lights and take all the DNA samples that you can so that you make sure that you're getting the problem fixed correctly the first time? Our assertion would be yes, absolutely you do. There is no benefit in trying to sweep up these messes yourself. You need to rely on experts and bring in interested third parties, obviously, who can help. And it's one of those things where, you know, it's tough to even know sometimes for our clients when they've been breached, right? There are incidents that come along. I can think of a company of mine that was dealing with someone who was a bug bounty hunter who pointed out a vulnerability and was, again, white hat in nature, was trying to help the business, but ultimately led to us preemptively notifying the insurance company just in case that breach later on turns out had not been cleaned up correctly and there was some financial loss suffered by the business. We didn't want to put them in a position where they're prejudicing their insurance company. So lots of different scenarios to think about. You want to consider your relationship with your key vendors, with your insurance company, and with your broker to make sure that you're aware of all the different people that will be assisting in the event of a breach and having a clear plan in order to manage an incident if it does arise. So that's it for me. I'm going to kick it over to the ISA team, who are going to go a little bit deeper here in terms of the technical stuff and things like key organizational risks. Thanks so much.
Thanks, Peter. Can everyone hear me? I want to make sure my audio is working. Great. So that's a great transition into risk, and the reason is it's incorporated in insurance in itself. I mean, it's the reason that people to apply for cyber insurance is to do some degree of transferal of risk. It's very important in terms of the process of applying for insurance, but it's also good for these scenarios and what Peter was talking about. And to expand a bit on my analogy in the hotel and a murder in a hotel, you got two options. As Peter said, you either clean up the room really quickly and get it back out rented again. That is what's called a recovery objective. So when we're involved in incident response and deeper and digital forensics engagements, that's when the insured and the insurance companies say, hey, we're driving for a recovery objective right now, versus a root cause analysis, an RCA, which is, again, tape off the scene, close the room, don't let any new artifacts in, and collect the evidence. And so oftentimes that decision has to be made fairly quickly. Oftentimes organizations, as Peter said, kind of do the fender bender and think, okay, well, I'm going to do a bunch of things to figure out how bad this is. And oftentimes in doing so, they eliminate kind of some of those evidence trails. We deal with them every week. Many times where organizations, we get called in to do the investigations by either insurance or by clients that we have direct retainers with, and some of the actions they've already taken eliminate some of those breadcrumbs. So I'm going to talk about risk, though, from a bit of a different area and kind of an area that's overlooked a bit in terms of how you quantify and how you determine risk in your organization. And this really serves a number of important purposes. One is if you've done a good job of identifying and classifying, and more importantly, if you have a process for doing this as new risks occur, and I'll talk about that in a second, this will be very valuable in completing an application for insurance, both cyber and errors and omissions and all forms of insurance that you might be doing. Because ultimately you're looking at insurance as a portion of your risk mitigation strategy. You can implement other controls, you can implement technology, people, process, and insurance can be a piece of that process. So with having kind of identified your risk areas and impact areas, you'll be better prepared to have that conversation about the things you need to ensure. Secondly, you'll have complete and better understanding of the policy and the discussions that Peter and his team will have with you about the insurance, and you'll be able to understand better if the insurance you're applying for and looking for will have its intended purpose, will help to mitigate whatever that risk situation is. And then in most cases, insurance helps in the case of financial risk and mitigating financial. And as we go through these 5 key risk areas, they all have a component of financial risk to them, but that's where insurance comes in. Perfect example of kind of making sure that the policy serves its intended purposes, and Peter can highlight this. A lot of the new policies being written in Canada and the entrants that are opening up the market to Canada have exclusions against ransomware. And a lot of organizations who haven't gone through a risk strategy or a risk process of identifying existing risks and or risks as they pop up may expect that their insurance policy is something that's going to cover that, and it may or may not. And so having a good risk structure and ability to analyze risk and predict risk and quantify it is important to having those discussions. And then obviously having the structure in place is the basis of making your kind of best business and technology decisions to go and focus and reduce the greatest risks to your organization as you've quantified them. We at ISA Cybersecurity traditionally look at risk from these 5 areas. These may not apply to every organization depending on your industry and sector. So you may have different, call it impact vectors that you talk about. We look at financial risk. These are kind of the direct losses that might be related to something happening. And again, it could be a cyber event like a ransom. It could be an employee destruction event. It could be an accidental event. It could be an environmental event. But the financial risk is one piece of it. Reputational risk is another very important one that we look at when we're building out a risk model for customers to follow as they go forward. And I'll give an example of that in a second with the next slide in a minute. But reputational risk is very important, and quantifying based on certain risks that you've identified, what would be the reputational impact to your organization? What is the legal and regulatory impact? Again, if you're collecting customer data, privacy or personal information in Canada or in Europe, you may have GDPR risks, you may have regulatory risks. If you're in the financial space and you have financial data and OSCE and those sorts of regulatory bodies. So these are other risk areas that we typically look at each scenario, or sorry, other impact areas that we look at when applying different risk scenarios. Records exposure. This is something we see in our business as an MSP and holding the data of our important customers. You may have it in your own environment, or you may broker that through a third party, in which case your records exposure would be through that third party. And then operational impact. What is the impact to your business? Which again is another one that kind of transitions oftentimes the operational directly related to the financial risk. And again, these may not be applied to every organization. You may have different categories, or they may change a bit by your industry. But you really need to define for your business the most important impact areas to look at. Next slide as an example. So I'm going to a bit of an eye chart, and I apologize for that, but this is the beginning of the process of kind of identifying your organizational risk. And that's really looking at those impact areas and then identifying what is high, what is low, what is medium, and all the areas in between, so that when a new risk is identified, when something like ransom, you can apply this logic across the board and say, okay, where does this fall in each of these impact areas? If I get ransom, what is the financial risk to my business? Will I lose 80% of my revenue, 50% of my revenue, 5% of my revenue as a business? What is the reputational risk to my business? If this goes public, is my business a brand that's worldwide known? Or is my brand lesser known and reputational risk may or may not be an impact? What is my legal and compliance risk? Do I have any obligation to notify and let people know? What records might be exposed if a certain risk event becomes true? Ransom's a perfect example. Oftentimes, ransom now is coincided with exfiltration. Organizations are no longer just encrypting your data and asking for a payment for ransom. It's normally in two factors now. They're doing that, and once you paid the ransom, they're saying, by the way, we also exfiltrated your data, and we'll make it publicly available unless you pay again, double ransom. And so it's another area that you want to look at in terms of an impact area. And then operational. What's a high operational risk? Business is shut down versus light impact. Next slide. So we like to talk to organizations about how to prioritize risk in the sense of modeling it out. And again, what we're doing today is really just a snapshot. Happy to have further conversations around it. Ultimately, an organization's CISO or CPO, if it's a privacy matter or whatnot, is your chief risk person, and they should be identifying the governance and risk controls in this. But you can't manage in your environment what you can't measure, and so we always recommend that organizations follow a bit of a process to kind of step through their risk in their organizations. First, you need to really define what you have. And so this is through typically, if employing external parties, gap assessments. You look at your capabilities model in your organization, your architecture model, again, gapping against what you need to have, what service frameworks you're following or you follow, what your service catalog in your environment is. And I'll touch on this when I get to building a cybersecurity strategy. And then what would be the measures and metrics that you're going to define to prioritize your risk. The next step is then measuring it. As I said, you can't measure what you can't, or you can't manage what you can't measure. So you need to collect those measures and metrics from all your cyber services. We define 65 of them in an organization. And again, I'll talk to that in a minute. But we define 65 that are important for an organization. And then undertake all forms of assurance exercise. And then finally, manage the risk and compliance. And this is really where, as I said, your CISO or Chief Privacy Officer come into play here. Mitigation options, I've highlighted the one in yellow there because insurance, cyber insurance, what we're talking about today is one of those mitigation options for risk reduction. And how do you determine which cyber program policy components you need? Facilitate risk decisioning for business owners or executive stakeholders, develop the resulting mitigation plans aligned to your security strategy, which we'll talk about in a second, and then manage remediation and communicate the risk and compliance status and trends to the organization as a whole. So I'm going to jump right in now to kind of the cybersecurity strategy, and either one of these can be done in kind of either order in terms of this discussion. We started with risks and again, defining a good kind of risk framework and how you determine risks in your organization without going into specifics on individual risks. But now I want to turn the attention to kind of a security strategy. And we, again, at ISA, we look at a kind of our approach or a reference framework for cybersecurity strategy. If you can play this out, Aiva, or sorry, Melissa, who's running the slides. So we look at this, and at the top of it is your governance domain, and we treat it as kind of 5 domains. These are the same domains as NIST as an example in terms of cybersecurity framework, or you can look at other frameworks as well. And we call it the ISA cybersecurity framework. So your governance domain, your advisory and assurance domain is one part of your cybersecurity strategy. You really want that's really driven by your CISO. You have your kind of systems and your systems development, your controls underneath all of that, and your security operations. And then it's broken down into the other 4 domains, which is your protection, detection, recovery, and response domains, all being kind of, response and recovery being kind of highlighted by incident management. And that's where we get brought in, as Peter mentioned, in issues or when outbreaks happen or when customers have ransom claims or other insurance things. And oftentimes organizations have their own security incident management framework as part of their policy. But you really need to, in terms of having a strategy, have this reference framework and have each of these covered off. And if you can go to the next slide and start to pull it out, Melissa. So again, in a little more detail, and I apologize for how some of these come across as a bit of eye charts, but a little more detail. You have your governance at the top, which compromises or has a bunch of components to it that are really driven by your CISO, cyber planning and development, your policy and standards, enterprise security, and then also under kind of your CISO in the light blue is your advisory and insurance, and that's kind of testing against the things that you've put in place. You have your protection services, your access control, then you have your detection, response, and recovery services, as I talked about earlier in terms of the reference framework. And then you have your supporting services, which are often other pieces of your IT business structure. And this is where I mentioned before, kind of the 65 different security frameworks. Now, not all of these may apply to every business. And again, not all businesses are going to be able to afford or justify through their risk monitoring or through their risk program covering off each one of these. So really in building out your risk strategy or you're building out your risk modeling, applying the risks that are applicable to your business, and then looking at kind of a gap assessment to where you have in each one of these different control mechanisms or pieces of the framework is the form of a gap assessment that we do and organizations need to do against their own environment. And then from that, you can determine which areas become the highest impact to reducing your risk. And again, these are parallel to cyber insurance, because cyber insurance can mitigate risk in the same sense of financial that you may not have in terms of putting the money towards any of these different categories in areas of security focus that you might have in your business. Next slide for a second. And so one of the things that we often see is CISOs and CPOs juggling those components of the risk in the governance framework and assurance and advisory, updating policy standards, all these things that is part of their job in creating that risk or that cybersecurity strategy that you need for your organization. And again, this is usually done by your CISO. In some cases, it might be a virtual CISO that you employ from an organization. We have many of them out with our clients today doing part-time to help deploy that cybersecurity strategy. But it really needs to cover off that framework as well as take the inputs from your risk plan. So with that, I'm going to pass the floor over to Aiva, and she'll talk a bit about the insurability report service that we've created as a first step to the cyber insurance process that Peter was talking about.
Can you hear me, guys? Good. Yeah, so as both Peter and Kevin spoke about, the insurance landscape is changing and companies are doing their best to adjust. And one tool that we here at ISA have created that could be a takeaway from this session today and could be the first step to renew your cyber insurance or to apply for one. It's called Cyber Insurability Report. And why did we create this in the first place? And I'm gonna mention some of the things that Peter already mentioned at the beginning of the session, is that the qualifying criteria has become much more challenging, and there's a reason for it. Insurance companies have been losing money for the past 2-3 years, and so they are also increasing the premiums. In fact, cyber insurance premiums have been increasing faster than any other insurance product due to the past losses. Insurance companies are also changing coverage. They're either limiting it, reducing it, and if the carrier does find issues in your environment prior to a renewal, they're giving you 45 to 60 days to fix these issues, which is both unrealistic and unmanageable. And then we come back to the qualifying criteria. you are not meeting the qualifying criteria in order to either get an insurance or renew it. Here at ISA Cybersecurity, our mission is to make the world a safer cyberspace. So this report is in support of that mission. And often it's also the first step to better cyber maturity, specifically for small, medium businesses and the mid-market companies. But what is this report? What is the Cyber Insurability Report? It is generated monthly, and it's auto-generated from one of the largest cyber scoring companies that we partnered with and built into our platform. But as Peter already mentioned, this report is made of publicly available data. I'm going to get to the second point in a second. There's no secret solution around digging in and finding the data. Everything that's in this report is available to anyone. This is just a tool to auto-generate it and generate it quickly. If you knew what you were doing, you could manually go into your environment and pull out the data one by one. But because this data is publicly available, it's also the data that the insurance carriers see and use prior to insurance renewal. And lastly, hackers are also the ones that can see this data. So if you leave a door or a window open in your environment, they're able to see it and take advantage of it. So it's not only a tool for the Cyber Insurability Report, it can also give you an idea of any doors or windows open in your environment. Second point is that this report helps to identify potential risks in your cybersecurity program that could either raise premiums or even disqualify you for a cyber insurance application. It should also, number 3, help our customers prioritize areas of greatest impact to insurance coverage and renewal, and also help shape and scope investment decisions. As you saw, Kevin pointed out 60 different areas that companies could look at to improve their security posture. How do you know where to start? So with this scoring report, I'll show an example. There might be a low score versus something that's 98 of 100. You would want to pay attention to the low score first. So that's one way how you could make your decisions in terms of where to make investments. Also, this report is independent of any cyber insurance carrier. It's provided by us. When you run them monthly, the insurance carrier does not see them. So there's no history of you started at this level, it wasn't as great, and then as the months progressed, you made investments into the environment, you fixed things, now it's better. The idea is that by the time that you get to a renewal, or hopefully 60 to 90 days prior, the insurance carriers start looking at the environment for the first time. So they are looking at a very positive situation because you have taken the remediation steps. Also, the next point is that this service demonstrates to many cyber carriers that you are taking security seriously, you are being proactive, and that's how you're able to also get better rates and renew the insurance altogether. And then number 6 is that this report will have a list of areas of identified concern grouped into 10 categories. I'm going to go over these 10 categories as I'll show you an example. But to sum this all up, this really is the first hurdle to cyber insurance. This will give you a glimpse into what cyber insurance carriers will see month or 2 months prior to the renewal when the application process is being started. And the website, as you see at the bottom, is isacyberinsure.com. You will be getting an email after the session with more information, so I encourage you to go there and take a look. But we will take a brief overview on what you can expect with this report. So next slide. When you go on the website, at the top right corner, if you're an existing customer, you log in to see your reports. If you're new, you would sign up right there in the middle, and we're gonna see the sample report at the bottom there. Next slide. So Acme Inc. is a made-up company. It's not real, but it's an example where we ran a report. We got a 78% security score, and we looked at 10 areas, such as network security, DNS health, patching cadence, endpoint security, IP reputation, application security, qubit score, hacker chatter, information leak, and social engineering. And then we rate these 10 areas from 1 to 100. And as you saw, everything that was under 65 got a rating of D or F. So this report is about 30 pages long. In each of these 10 areas, you will be able to go in a bit deeper to take a look where the issue is found. As you can see, there are also a number of issues per each point. And then next slide. We also assign a severity of issues that we found. So for example, for network security, there were some weak protocols that were rated high severity. There are also medium severity issues, low severity issues that we take a look at. So to sum this all up, the report is, like I said, it's a monthly report, but you sign up for a full year and it costs $9.95 for the year. So plus tax, so it breaks down to about $83 a month. And Peter might share maybe some examples in depth, but there are some customers that have gotten already a good ROI on the investment because their cyber insurance premiums were not increased by as much as they would have been otherwise had they not used this tool and improved the areas of concern. So I would look at this tool as something that not only gets you ready for insurance renewal, but also is the first step to help you improve your cybersecurity posture and remediate those super easy targets before they become an issue. With that, I think I'm gonna leave the floor open for questions. We have 15 minutes left.
Does anybody
Awesome.
have any questions before we open it up? Okay, Ava, I'm going to start with a couple here. So you actually just showed Acme's score for your sample, and they got a 78%. Okay, if I was at school, that might be a pretty good number. What is an ideal number? Other than, like, I know you're probably aiming for 100%, so it could be maybe both yourself and Peter who answer this. What is an ideal score when you're looking at that?
You want me to jump in here, Aiva? I could jump in here. What we've found, and Peter can talk to this as well, is, as Aiva mentioned, this is a first gate. This is the first step to kind of a cyber insurance renewal. It's giving you the proactive information beforehand. It's similar to what the insurance carriers are going to see on their own, and as a result, at that 60-day time frame, what we're seeing is a score of 70 and below. An organization will probably, or a carrier will probably say, thank you, but no thank you. There might be too much risk here. And that could be the company you're with today in terms of renewal. They don't renew. It could be also very challenging to go out and get others to look at entertaining providing you a policy. So a score of 70 and below typically doesn't get you to the next step, which is the full application. And okay, let's look at the application, because the application itself and of the framework and the 65 different control objectives in cyber that we talked about in my portion of the presentation, the application itself covers a lot of those. The external scan or the external reporting that both the cyber carriers and that we do only covers some of them. As Peter mentioned before, multi-factor authentication. There's really no awareness of what multi-factor you're using or whether you're using it at all from an outside looking in standpoint. However, when you get to the application, that becomes a principal question. And so a score of below 70 usually stops the process. Yep. A score of 70 to 90 usually says, okay, we can continue with the application process or renewal process, but you need to get up to a 90 before your renewal date. Otherwise, that'll be a kind of a showstopper for us. And then 90 and above tends to be, okay, let's start the renewal application, and you kind of goes through from there. So in terms of scoring, that's generally what we're seeing in terms of in terms of the industry and the carriers kind of ranking these customers. Again, each carrier has their own risk mitigation and risk methodology in terms of what they believe is the strongest numbers. And if I can prophesize for just a second, this report is helping customers kind of fix their own things. And as Peter said, there's certain attestations that customers now have to sign, like MFA, that they didn't have to 3 years ago. If I can prophesize for a second, I think in the future years, as they strive to get under that 100% claims loss ratio or under that $1 for $1, what you will see is insurance asking for third-party attestation, not internal attestation or sign off. So you may need to, in the future, have somebody else say, yeah, I validated that they have the right people, process, and technology in place around MFA or around whatever the control framework that is most key to them is. Peter, do you want to add anything to that?
No, I think you nailed it, Kevin. That there's no perfect answer in terms of what the scoring is, but Kelly, it's more of we're seeing more of a red light, green light thing, right? Where it's markets are declining to offer terms or stick their necks out at all if you don't meet a certain minimum threshold. Over that threshold, until you get to perfect, there may be an influence in where you fall in terms of the band of pricing. But generally speaking, no, there's no, it's they're just like Kevin said, it's more of a showstopper if you're not meeting that threshold, that minimum threshold.
Okay. And the carriers do look at, so if your score is impacted from 90 to 85 on one of the 10 categories versus another one, that will have impact. You might be an 85, but your weakness is down in something that they don't treat as all that important, versus you might be an 85 and you have core network gaps that they treat as very important. So again, it also depends on where in the 10 categories that we look at, or the 10 categories that they look at, your weaknesses or your identified issues are.
Okay, perfect. That actually answered kind of my next question, because I was going to say, I saw that you had, here's high risk things and here's that are a little bit lower risk. Kevin actually is asking, are you seeing insurance companies moving to preferred vendors in the cyber sector? So kind of like your dash cam for your auto insurance.
So the answer is yes. This is already well established, but the insurance companies all choose a panel of service providers who they use for various points of breach response in terms of things like who your breach coach is going to be, who the law firm is that you're going to be working with in terms of notifying the privacy commissioner, that kind of thing, and then who the cybersecurity company is that you're going to be working with to do the forensics, do the cleanup, do the remediation, that kind of thing. Yes, the insurance companies have a dedicated panel of users. That goes to sort of my point earlier about reporting, where we've had incidents in the past where clients have chosen to clean the mess up themselves and have used a vendor who maybe did not fall on the preferred service providers list, and then tried to just submit the receipts to the insurance company. And then we got into a position where there was a dispute there. And my point is that what I was trying to highlight earlier was that if we had been notified up front, we could have either cleared that provider with the insurance company up front, so there would have been no dispute over the invoices, or we could have recommended that they proceed with somebody who's on the approved panelist list for the insurance companies anyway. So yes, they do have a preference when it comes to who they use. It's another sort of hammers on the same point I was making before, that you just need to communicate with the parties involved to make sure that everybody's aware before you make your own decisions there.
And to add to Peter's comment there, they have a preference of who they use when there's an incident. So it could be ISA, it could be another firm when you're making a claim. In terms of the application process, and I don't know if that was part of the question, Kelly, that you're asking, in terms of the application process, our experience is that the carriers are not going to decline or accept your application because you use one endpoint protection platform versus another. They just want to know that you have one. They know all of them that exist, and they know the capabilities of all of them. It may go into their determining of your risk or your premium, but they don't recommend platforms in terms of controls that you have to implement in your organization. That's kind of outside their swim lane. Is that fair to say, Peter?
100%. That's correct. Yes. proactively, you're allowed to use whomever you'd like. They just have preferred vendor agreements with certain suppliers for the cleanup. But before that, no, you're welcome to use whatever partner you'd like. We would strongly recommend using ISA, obviously, but there are lots of great cybersecurity vendors out there. I see that Rod has his hand up for a question. Rod, do you want to jump in?
Sure, thank you. I know it's going to vary tremendously, so here you go. I'll just ask my question. Is there any data on the average amount of liability levels that companies are, seeking right now, and then pay or cost bands, associated with that? Like, do you understand my question?
Yeah, I do. So in order to do so, I could, Rod, if you want to set up a separate conversation, we could certainly go into some of the details about your business, and I could give you a pricing estimate, like a range of pricing where we would expect. We're seeing contractual limits, contractual requirements for limits increase. So especially if you're working with American firms or signing into MSAs with American companies, we're seeing the standard for cyber liability, not necessarily first party coverage, but liability has become 5 million. You usually need 5 million. In some cases, if you're touching anything like health data or data on vulnerable populations like kids or the elderly, the minimum table stakes is 10 million now is what we're seeing. And that's on the liability side. What clients need to understand is that the policy is formed around two different core components of coverage, right? There's first party coverage, which is coverage for all the expenses incurred by your business directly, which is where we're seeing a lot of claims. And then there's third party coverage, which is the limits I'm talking about, the 5 and 10 million for liability. So a large lawsuit or a class action brought against your business based on your mishandling of client data. We're seeing far fewer claims in that category. And so it's a little bit more cost effective to manipulate the third party limits to meet the contractual requirements, and then choose a first party limit that you're okay with yourself in terms of what you think the spread of risk is or the costs would be to your business around managing your expenses if you were to be breached. So those are the two components, but that's what feet on the street. That's sort of what we're seeing right now, Rod.
Yeah, it's very helpful. We've been getting quotes, and there's an exponential leap between 2 million and 5 million liability. Yes. It doesn't go up, proportionately. It's just this, like I said, exponential cost difference.
For sure. Again, happy to have a discussion about that offline. There are some strategies that you can undertake since businesses are pricing their first 2 million the most effectively. We can build towers. So you can take 2 million from one company, 2 million from another, and 1 million from a third to reach the $5 million insurability threshold that you're looking for. But there's some strategies. I won't bore the crowd with all that stuff, but I'd be happy to chat about that further, Rod, if that's of interest to you.
Yeah, thank you. I may follow up with you.
Okay, sounds good.
Other questions? Okay, so I have one. Aiva, you spoke about the insurability report, so you kind of went over that. Can your insurability report replace a penetration test?
Yeah, Kelly, it's a good question, and we had one more question come in as you were asking this one. No, it wouldn't. This, like I said, is collected from publicly available data, so it's. Penetration test is much more bigger engagement, where a professional would go in and mimic how the threat actors would go into your environment. So it's a much more sophisticated engagement, but also you could not, if you need a penetration test for any type of compliance as a check mark, you could not use this assessment instead of that and pass it off as a check mark for that goal.
Okay, thanks. And you said you had another question, and I see Stan's got his hand up too.
In the chat, there was one.
Yeah.
Okay, Stan, go ahead.
An introduction, but I have a question just about how often do you encounter smaller companies, let's say, who really didn't recognize previously that they really had to protect their application or their business and so on, and it really is a cost that they just don't know how to deal with. It's like I didn't realize that my business is so vulnerable. Let's say that there's health data or something like that, and it really blows up their entire business model because they really didn't factor in the security element when they were developing their business model. Do you encounter that sort of thing?
Every day, Stan. That's part of our business. I mean, again, in the enterprise space where we operate, those enterprises have covered off many of the components of the framework and have CISOs whose job is that. CISOs don't run the security stack. The CISOs make sure the governance and things there. So they're more apt to handle that. But in smaller mid-market companies, I mean, I can 90% of them plus don't have a CISO.
Yeah.
They have a person that's kind of their key IT guy who plays a jack of all trades role. And oftentimes they haven't done that. They don't have a kind of risk model in place to evaluate risk. And then they haven't gone through a strategy to build a cyber strategy and evaluate all their kind of critical assets and what are the kind of keys to the kingdom. And again, are we collecting healthcare, credit card, privacy data? So we see it all the time. And unfortunately, a lot of times we get called in those small businesses. One, they don't have cyber insurance to cover them off. So they're kind of scrambling to keep their business open. It is what I refer to commonly as most business owners' darkest hour. I mean, we go through business struggles, we go through these things, but a really good kind of bedside manner is important, empathy, because it is really for most organizations, and I'm involved on a monthly basis with organizations that reach out to us that are going through kind of their darkest hour. And a lot of times it is a lot of this pre-planning. And I had a conversation just this morning with a CIO at one of the universities. And unfortunately, even the enterprise organizations don't put enough towards cybersecurity until an event occurs. And then it's kind of the shot across the bow, the eye opener that causes them to realize that they're behind the eight ball in terms of funding a cyber strategy.
I have an analogy, or at least an example that I wanted to run by you and run by the group here. There's a small company that I've done a little bit of consulting work for, and I know the owner. They're a startup, they're a 4 or 5 year old business. They have a huge market opportunity to get into an industrial application to do a digital twin type of system, like a IoT type of application. And one of their large potential clients asked them for their cybersecurity, kind of regime. And they don't really have one as yet. It's kind of on a future roadmap that's poorly defined, but in order to break it really seriously into this market, they have to have it. They really don't have the means to get there before scaling up to do it, but they can't really penetrate the market before scaling up. So, I've been thinking about what would be the approach to dealing with this like they've got a 3-person, software development team. I think they really need to partner with a larger organization that has the wherewithal to actually protect their assets and to protect their clients' assets. I don't know if that's a scenario that you've ever run into before. I'm curious.
You're seeing it now, and you're going to see it even more with third-party risk. I mean, because this customer, your client's customer is looking to presumably outsource a piece of their business or provide a piece of their business to the company you're working for. You're seeing it. SolarWinds is an example 2 years ago, really raised the level of organizational analysis of third-party risk. So anytime, to Rod's question about liability insurance, we're seeing in the industry that requirement go up on every third-party contract. Hey, we want to engage with this company. Okay, we used to want them to have $1 million. Now we want them to have 5 and 10. We used to ask them kind of simple questions about controls. Now we want to know all the controls they have and the controls of the third parties they work with, because it's kind of that notion of everyone touches everyone, and the downstream supply chain can impact the ultimate customer. So you're seeing more of that, and it's why having a good strategy, having a risk model that you can go and talk to that customer and say, here's how we define risk as an organization, and demonstrate that to the client, and then having a gap assessment and the strategy to say, hey, we understand we have some issues, we're looking to address them, and we have a plan to address them, but here are the things we have in place. That goes a long way in assuring those organizations, when you're having those customer conversations, that you have taken security seriously. As Aiva shared, and as Peter can share examples, they've had clients that even in the insurance realm alone have demonstrated, hey, we're getting a monthly report and remediating things on a monthly basis. And that to the carriers has said, okay, you take security seriously. So every little thing that you can do that adds to the fact that a third party looking at you, or a supplier or a customer looking at you to engage with you, can show that you're taking security seriously is important.
I know we're coming close to the hour, but we knew a stat that kind of 83% of companies that get breached once will actually get breached again, which is pretty astounding. So I think, Kevin, you can probably answer this. Maybe what are some of the top compromises that you're seeing in terms of breach situations?
Yeah, there was a fallacy that there is honor amongst thieves, and I can tell you emphatically there is no honor amongst thieves. Once an organization is breached, they're identified as a victim and subsequently usually victimized again. And it's unfortunate, oftentimes by a different group, different threat actor, but the information's made available that they were a victim. In terms of compromises, I mean, ultimately, your people are your best firewall, and so we're seeing a lot of the kind of root cause of the breaches that we're involved in start with largely accidental or unaware people clicking on things. The threat vector is obviously and usually email. So people clicking on things through phishing campaigns or targeted campaigns, malicious links. And so that's by far the number one vector that we're seeing as a compromise and then the countermeasure to that is obviously a highly educated a workforce and making cybersecurity awareness a program in your organization, not a checklist on an annual basis. Because far too many organizations roll out a video every year and say, hey, watch this video, and now you're trained and you've been checked off the box that you've done a program or that you've done something. Whereas having a program where you're training and testing and continuously monitoring, that's the number one vector that we recommend for organizations against the number one compromise, which is people as your vulnerable sector or vulnerable people, more so than what was 10 years ago where you had vulnerable systems, because breaking through a person is a lot easier for the threat actors than breaking through a system and breaking through the controls that are in place. So that's one of the top ones. Again, email being the vector by which they're doing that. Misconfigurations is often a second one where organizations, especially in this world of OT, when organizations are implementing new OT controls or other things that they don't have a good awareness themselves of how to secure. A lot of organizations know how to secure the IT infrastructure, but not the OT. So that becomes another kind of compromise gateway point into organizations that we're seeing.
Okay, thank you. I really appreciate that. And I know we're just after 1 o'clock. So if nobody has any other questions, if you do, feel free to email them to myself. We will send out some information. I will send out also a link to the recording so that you can kind of go back through. If you would like to connect with Peter, Kevin, or Aiva, their details are right here. And if you didn't capture it, please feel free to reach out to myself. Peter, thank you very much for helping organize this. Aiva and Kevin, thank you very much for your wealth of knowledge and being able to share that. It's always a scary thing, you know, when you look at some of the things that are occurring here. We would love for you to join us at future sessions. Please check out our calendar and reach out to Ryan or myself, and we would love to have you join a session. Everybody have a fantastic day, and we look forward to seeing you in the future. Take care.